One, as soon as it says live. Hey, everybody, welcome back to another edition of VCTV with your host, Scott Ellicott. I am here to talk with you and with some of our outstanding family members of the VCTV family about investing in blockchain and other cryptocurrencies and how to do that, how not to do that, and just in general, how can you get started investing in the blockchain without having to buy cryptocurrency. And today I'm joined by two, again, outstanding family members of the VCTV family, David and Mark. Before we get started, big thank you to the Token team, to Hasvik and Maria for making today's episode possible. If you haven't done so already, please subscribe to today's channel to learn more and hear from all speakers of the VCTV family all day, every day. David, why don't you kick us off with a short introduction and background?
Sure. So I'm David Towell, president and co-founder of ProChain Capital. ProChain is a 4-year-old crypto-focused hedge fund. We invest in cryptocurrencies, tokens from largest, I wouldn't say the smallest, but certainly, down the chain in terms of size. For purposes of this conversation, as a matter of fact, we also have a good portion of our fund dedicated to investing in equities, publicly traded stocks, and eventually, hopefully, we'll see some fixed income in the space as well, of companies that are devoted to, either in whole or in part, to blockchain, cryptocurrency, digital payments, and so forth. And in addition to that, we do have a portion of our fund that we allocate to venture stage investments, all obviously being private investments.
Wonderful. Thank you. Mark, a little intro and background for everyone as well, please.
I'm glad to be back, Kyle, seeing you and David. It's always a pleasure. Born and raised in Germany, living in the Seattle area, recovering Microsoft after over a decade, running a consulting business that is like a little mini McKinsey, fixing difficult problems for well-paying clients. In addition to that, I'm an investor for the last, decade as well. Started as an angel investor, so here a member of the Alliance of Angels and a couple of other funds. I'm on the board of a bunch of different funds that are focusing on investment opportunities for people with more money or lots of money, and trying to take advantage of all the opportunities, including in the crypto space. So I've been myself active in that space, and I'm co-managing a group of investors that are really caring about the crypto space called Codex 3, in addition to all the other things we just talked about.
I love it. Well, all three of us are investing in this space that is a blockchain, and in some cases defined as Web3, and the next movement of the internet, or the next wave of the internet. But for those who may be tuning in for the first time, how can you really invest in blockchain, whether that be the protocols, the networks, or the technology, without having to go at the cryptocurrency or digital asset level? And again, for those that may be tuning in for the first time, David, why don't you kick us off with some of your knowledge that you have in this space?
Yeah, certainly. So we might as well talk in terms of most recent news. So now we have in this country futures-based Bitcoin ETFs. There is not a spot Bitcoin ETF. We all don't expect it to be coming very quickly. But that said, you can get exposure that way. Certainly, there are, I'd say, vagaries between the futures market and the spot market. But frankly, for the average investor who simply wants to go ahead and get exposure to Bitcoin, that's certainly one way to do it. Another way to do it is through the Grayscale Bitcoin Trust that has been around now for a number of years. Again, it is not the most beautiful architectural structure in terms of the way to invest into Bitcoin, but nevertheless, it's a way to do it directly through public markets. You can buy GBTC, I think, in any investment account, although I don't think you can buy GBTC directly in a 401k. You may be able to buy the futures ETFs in the 401k. I'm not positive. You can also buy MicroStrategy stock. MicroStrategy, largest public company holder of Bitcoin. Michael Saylor is a Bitcoin perma bull. I'm sorry, 2 words, perma bull. He, essentially he has converted his company, although it has operations and has operational activity. Nevertheless, that operational activity is now incredibly dwarfed by the Bitcoin holdings. As a matter of fact, MicroStrategy has borrowed money in order to buy additional Bitcoin. So it's a leveraged play in some ways on Bitcoin. So those are some of I'd say the easiest ways. Again, not as elegant as one might want, but nevertheless, it's a way to do it very elegantly for purposes of trading in your fill in the blank interactive brokers account, Fidelity, E-Trade, whatever platform you might use. And then to move further away from that, and with this, I'll pause. Certainly, there are other companies that are involved in blockchain and Bitcoin and cryptocurrencies generally to differing degrees. For instance, Coinbase is the public exchange that we've got that trades. You can invest in Galaxy Digital, which is, I'd say, a merchant bank in ways of the cryptocurrency space. It's listed in Canada, but you can buy that stock situated in the United States, depending on the capabilities of your broker and the abilities or the permissions in your account. There are ETFs, spot ETFs, actual Bitcoin ETFs that trade elsewhere in Canada and Switzerland, amongst other places. And in addition to Coinbase, you could start going down the chain, and these are companies that we look at fairly often, including Square, PayPal, Visa, MasterCard. All of them, in some degree, are devoting resources. Certainly, getting exposure in the public for their forays into various aspects of blockchain and cryptocurrencies and NFTs and stable coins as well.
That's a good point. So you're saying there's a lot of different opportunities out there, public and private market opportunities. Mark, anything to add into that as an investor, an angel investor as well, getting started in blockchain-based investing?
I think David's list was quite comprehensive. First of all, everything we're saying is not investment advice. It's just for educational purposes. So if we mention the company or a token, please don't take it with the do your own due diligence. But I think first of all, it's important for the individual or the organization to understand why do they not want to invest directly into the cryptocurrency. I think there is ways. When we started 5-6 years ago, it was really hard to buy Bitcoin or Ether but today, companies, as I said, David just mentioned them, Coinbase, make it very, very easily to directly invest in a specific cryptocurrency, open up an account and be participating there. Having said that, for a lot of organizations and even individuals, both from a compliance perspective, legal perspective, regulatory perspective, that might not be an option. And I think this is where a lot of the alternatives that David mentioned are very beneficial for them. So institutional investors, when we looked at funds, there's hedge funds, there is more venture fund type styles. It depends a little bit on the individual's profile and, to be blunt, check size they want to write. There are hedge funds that are starting for qualified investors at $50,000. Others take a minimum of $2 million of an investment. But again, for a lot of family offices, that might be a great option. They have a professional managing the assets, making sure custody, security, insurance, all of these things are taken care of. And they still get the exposure to a space without taking a lot of that risks there. I think David mentioned Grayscale. Grayscale has a really interesting set of fund products that are focusing on different areas. But again, they are focusing on the accredited or sometimes even the qualified investors, how we are calling them here in the US. There is an application I want to plug here that is really for everybody. It's called Makara, Makara. It's an app, I would say it's more like Robinhood for crypto, that allows individuals to deposit small amounts and then allocate them to the blue chips of the market or the DeFis of the market or even the metaverse, and do not have to think about all the details behind it, which tokens to pick. So I'm personally a big fan of that product, and I'm excited since it's out to play with it.
Well, we also have syndicates. We also have crowdfunding, right, where companies or individuals can participate for as little as $100 US. to invest in the equity side, and in some cases the digital asset side as well, right? When a fundraise might have both pieces of that as a part of the event as well. And David, I know you mentioned a lot of the different ETFs that are out there. We're also seeing a lot of funds and markets created around some of the alternative tokens or assets as well, outside of the core, Ethereum and Bitcoin as well. We've seen some, I think, around Polygon or Matic, Solana. We've seen a few others in the DeFi space that have recently popped up to help investors get that exposure through the public markets that you mentioned as well. And even though you did lose the ETF bet, nonetheless, don't hold you too much to it. But talk to us a little bit about what you see upcoming. These areas of blockchain that are starting to open up for investment or for growth. Where do you see some of the opportunities that those that we're talking to today in the audience can maybe start keeping an eye on? Mark mentioned the word metaverse. Maybe some of those themes, the categories that you see popping up, David.
So I'd like to go ahead and focus on one point, which is liquidity in your investment. It's something that we, as managers of a hedge fund, as Mark alluded to, amongst various products that are offered out to investors, we think of liquidity very carefully. And even though, an investment, an LP interest in our fund is necessarily illiquid, there is nowhere to trade it. The liquidity terms of the fund are important, and we do have a 1-year lock on our lockup on our fund, and then even after that, 50% investor level gates. But yet, at the same time, we think very hard about the liquidity terms of what we're investing in. So tokens and equities are incredibly liquid, right? They can, pretty much be liquidated at any time of day almost now. And certainly for the equities portion, for the stocks, it's an incredibly deep market in a lot of these names. So I'd say some of the smaller capitalized names that are listed on, maybe in Canada versus, the United States, maybe there's not as deep liquidity as a lot of insider holdings. So maybe not a lot of trading volume on any given day, but nevertheless, liquidity exists. Tokens, not regulated. So a little bit of a different animal in terms of what you could expect on any given day. We've seen some crazy swoons. Fake information comes out. Prices of currencies spike and then drop. But nevertheless, liquid deep markets. At the same time, like I said, we do have venture level investments. Now, on the venture level investment, for instance, we're involved in one right now. We were just given notice. There's actually going to be a monetization event or a liquidity event. There's going to be a listing, a public listing. However, we've been asked to go ahead and sign up for a 6-month lockup post the listing. And that makes good sense, right? It shows that your insiders, your early stage investors are very committed to the business. They certainly don't believe that the listing price fully reflects the value. And so therefore, it's a good show to go ahead and create the lockup, right? Otherwise, there could be a rush to the door and, stock could, puke on day one. So, we've been asked to go ahead and sign that lockup letter. There could be liquidity or could not. There's the company still waiting to see if there are insider buyers and sellers that want to go ahead and get in more deeply or get out prior to the listing of the stock or offering of the stock. And we're weighing that, right? Because to say to ourselves, okay, this is a particular type of company. It obviously is not a token, right? So we're not talking about, 1,000+% potential return over a short period of time. We're talking about reasonable returns here, on an operating business. And do we want to go ahead and be locked up, as opposed to there are comps to this business that already exist in the public sphere, right? The business is, we're not talking apples to oranges to bananas, right? We're talking about Granny Smith versus, Deep Red or Macintosh, right? And would we rather be in the public equity of another company that's a comp that we could trade in and out of every single day, as opposed to signing a lockup for this company for the next 6 months. And, I'm a fund. I have locked up money, right? And I'm thinking about this. So an individual investor should certainly be thinking about liquidity. Not to say that they need the liquidity on any given day, but, are you getting an illiquidity premium? You should be getting paid for the illiquidity. How much? It depends on the business, the riskiness, the exit terms and stuff like that. But it's something that we do think a lot about, because in this space, in contrast to a lot of other asset classes, there really is a very wide range of liquidity profile to investments. And yet, at the same time, there are very good comps all across the liquidity spectrum for either an exchange or a custodian or a miner or a NFT producer, so on and so forth.
Right. No, I completely agree. That's a great point to keep in mind, especially looking at some of the digital assets and others in the blockchain space as well, including NFTs. Mark, closing thoughts, anything else to add in terms of categories to keep eye on, and then where can everyone find you online to continue the conversation?
Sure. I think the conversation was quite broad today, from public equities, and I think mining companies, Bitcoin mining companies, obviously, belonging into the same category. Things like Marathon or Riot, I think, are very well worth to hold in a portfolio if you're inclined to invest in that particular space. And again, I think David's point on liquidity, I think, is critical, making sure that you're clear on what you're investing in. I think the Squid token was a good example of what non-liquidity looks like, aka a scam, where your money disappears very, very quickly. So be aware exactly of what you're investing in general, not only in the crypto space, but especially in the crypto space. Be mindful, surround yourself with partners like David, who are knowledgeable in this space and are really looking at what's possible. And then follow people follow those people they follow that are in that space. And here it comes. You can find me on Twitter. Here we go. Does this work? Yes, here we go. @MarkM.Eberstein. That's where you find me on Twitter. And happy to continue the conversation there. And I really appreciate to be part of the LA Token family, Cal.
Wonderful. Thank you very much, Mark. David, where can everyone find you and ProChain Capital online to continue the conversation?
Sure. Twitter @David D. Towel. You can connect with me on LinkedIn as well. And certainly looking forward really to the development of all of this. I do think that there is going to be a lot more to do in the public markets over time. The numbers that some of these enterprises are seeking in the billions of dollars, that type of capital is not so easily raised in the private markets. I mean, certainly where the private markets are on fire right now. Venture was a huge driver for returns last year for endowments and foundations and so forth. But I do think more and more there's going to be more to do in the public market. So that's a good thing, I think, for average investors, because it's really easy to access public equities. Thank you.
Wonderful. Thank you very much, David and Mark. To our audience, thank you so much for tuning in. If you haven't done so already, like, share, and subscribe on today's episode. Make sure you're following both Mark and David on Twitter, along with all social media outlets. Reach out to all of us. We'd love to hear from you. Please do add context where you heard us, where you met us, and what you would like to continue the conversation about. I'm your host, Kyle Ellicott. You can find me as well on social media @Kyle Ellicott. Big thank you to the Token team and to the VCTV family for making today's episode possible. Until tomorrow, everyone have a wonderful day, and we'll see you soon. Take care.
Thanks.
Bye.
That's the Makara app. Okay, have a good one.